Besties Proprietary Limited is a CGT small business entity with all shares owned by David. Besties recently made a capital gain from the sale of its business premises, which it had held for 10 years. Besties satisfies the basic taxpayer and active asset conditions for small business CGT concessions. As the 15-year exemption doesn't apply, the capital gain is first reduced by the small business 50% reduction. Besties then made a payment to David's complying superannuation fund, taking advantage of the small business retirement exemption. Besties also chose to disregard the remaining portion of the gain under the small business rollover by purchasing new business premises. Eligible small business entities may be able to access capital gains tax concessions in certain situations. The concessions may reduce, defer or disregard a capital gain in respect of a CGT asset for the taxpayer or its shareholders. There are basic eligibility conditions that must be satisfied for each of the concessions. Firstly, the taxpayer must either be a CGT small business entity or be a partner in a partnership that is a CGT small business entity, or satisfy the maximum net asset value test. Secondly, the CGT asset must satisfy the active asset test. This requires the taxpayer's asset to have been active for at least half the ownership period, up to 7.5 years. Thirdly, if the active asset generating the capital gain is shares or interests, then requirements relating to CGT concession stakeholders must be met. These requirements depend on whether the taxpayer claiming the concession is an individual or an interposed entity. Now that we know the basic conditions, let's take a closer look at each of these concessions, noting that additional conditions may need to be met. While the 15-year exemption concession takes priority and can only be used in isolation, the remaining concessions can be combined to provide multiple layers of relief from CGT. Under the small business 15-year exemption concession, eligible taxpayers can fully disregard a capital gain on CGT assets that have been held continuously for at least 15 years. Under the small business 50% reduction concession, eligible taxpayers can reduce the capital gain by half after the application of any available capital losses and the CGT discount. Under the small business retirement exemption, eligible taxpayers can fully or partially disregard a capital gain where the proceeds are used for retirement. Under the small business rollover, eligible taxpayers can fully or partially disregard a capital gain where the proceeds from disposal of an active asset are used to acquire a replacement active asset and/or make an improvement to existing active assets within the relevant period. To recap, a range of small business CGT concessions exist to reduce, defer or disregard certain capital gains for eligible taxpayers. Basic conditions must be met for all the concessions, broadly relating to the eligibility of the taxpayer and the eligibility of the asset. Additional conditions are then imposed for each specific concession. These broadly relate to the length of time assets were held and the subsequent use or purpose of the proceeds. Assuming the relevant conditions are met, multiple concessions can generally be applied, although the 15-year exemption takes priority and can only be used in isolation.